Hi everyone, Lou here. You know, since the federal budget announcements came out last week, I've had a lot of conversations with landlords who have been feeling nervous about what they're hearing around negative gearing, capital gains tax and family trusts. And honestly, I completely understand why. Whenever the media starts talking about investment property taxes, changing legislation or property values falling, it naturally creates uncertainty in the marketplace, especially for landlords who have worked incredibly hard over the years to build and protect their investments. But before anyone panics, I think it's really important to take a step back and look at the bigger picture. One thing that I have learned over the last 25 years in property and through my own experience as an investor myself is this: the markets change, governments change, policies change, interest rates change, media headlines change, but strong investment fundamentals still matter the most. And right now, across many parts of Southeast Queensland, we are still seeing strong population growth, ongoing housing shortages, and very strong rental demand. So those fundamentals have not disappeared. So while these proposed changes are absolutely something that investors should stay focused and informed about, it does not automatically mean that as landlords, we should be panicking and making emotional decisions. In fact, uncertainty often creates opportunities for investors who stay calm, they think long term and position themselves properly. And I also think it is important to remember something else. A lot of these discussions are still proposals and political conversations at this stage. It hasn't been legislated yet. And there is often a very big difference between what the media headlines show and what actually becomes legislation later on. And even when laws do eventually change, experienced investors will adjust strategy and adapt rather than panic and sell emotionally. So for me personally, I think this is the time for landlords to 1, review their investment strategy, 2, understand their cash flow properly, 3, review any loan structures, and 4, make sure that their property is being professionally managed correctly. Because good properties, good locations, good financial structure, and good property management still matter far more long-term than short-term political noise. So, as both a property investor and a property manager myself, I genuinely understand that some landlords are feeling anxious right now. I have personally lived through different market cycles, interest rate movements, policy changes, and changing investor confidence over the many years. And while uncertainty can absolutely feel stressful when it involves one of your biggest financial assets, history has consistently shown that well-managed properties in strong growth areas continue to perform well over time. So particularly in the areas where housing supply remains quite tight. So if you are feeling uncertain about these federal budget discussions and how it could mean for your investment property, look, I am always happy to have a confidential conversation with you. No pressure, no scare tactics, just honest guidance and practical perspective from someone who genuinely understands what landlords are going through. I'm Lou from Real Estate HQ. If you would like to discuss your investment property, your strategy or your current market rental, please feel free to contact me anytime on 0425 225678. Have a lovely day and I'll see you in the next video.